morning, everybody. Good afternoon to my friends across the pond. Thank you, Christian, for that enthusiastic, exciting intro. Good morning. Hope everybody is doing well. It is quite a day. Iran has essentially closed the Straits of Hormuz. And out of this, we're getting to the memification of energy. Now, we've got three main things that we're watching here that continue to be in our focus as we head into this, what is clearly a market in flux around the war in Iran. And you can see it in how everything is trading. S&P down 2%, Dow down 2%, NASDAQ down 2%, small caps down 3.5%, VIX up 4.5 points. But underneath this, there is a bigger story to this whole thing. Right, you can see the S&P is nicely down. You can see the gap. But there is a greater story to this. Yes, SPX has now broken down. Next stop, I'm looking at levels where we could run into some resistance. 6,700 is an obvious one. And then below there, we're talking in between 6,600 and the 200-day moving average. So you have, the Strait of Hormuz cannot be like technically shut down, but what Iran can do is firebomb the tankers going through, and none of them are want to go through, and that is what is happening. So you're getting some pretty knee-jerk, ugly reactions out of the market. Again, we're kind of at the lowest levels since November of 2020. So you look at the market and you say, so what's going on here? There should be some really clear winners here. And even an Exxon doesn't look that hot. It's down today. CVX down today. Energy across the board down. The only thing that's up, oil itself and natural gas. And I want to talk to you about a pattern we continue to see. And I want you to look at USO. It is the memification of moves. Moves are happening faster and stronger when a piece of news hits and getting overshot faster than we've seen. We saw this in software stocks with SanDisk, or memory stocks with SanDisk. Now it's held here, but it basically memified. We saw it with gold. I mean, take a look at this chart. All right. Now, if I told you this is where oil, this is a chart of oil, and you didn't see the prices, you would believe me. This is how gold behaved during the month of January. And I would remind you what happened there and after. Gold shot from the 16th. GLD went from $420 to $510 in 11 days. Now, mind you, this is gold. And then over the course of 2 days, was back to $427. This is memification. And we are seeing that in oil. Now, are there reasons for oil to be higher? Yes. If this conflict lasts longer than 2 weeks, Oil is probably fairly priced. Maybe a month. If this conflict is over in less than 2 weeks, then oil is massively, and I mean massively, overbought. Doug D wants me to explain memification. And that's a great question. I'll happily do that, folks. And then in a second, I'm going to bring on Vaz. So, do we remember a company called GameStop? Back in 2021, a little over 5 years ago.
Hey, Mark.
Yeah.
Hi, Mark. I'm sorry, mate. I have to jump at 10:12. So yeah. Hi, guys. Sorry.
Hi, everybody. Hey,
I don't
folks.
mean, I
It's
don't
the
mean
one and
to,
only Olivia Vaz.
I don't mean to chart block you, but I'm
Yeah.
going to do it right now. And then we'll get back into the memification. Hey, guys, welcome to the show. Thank you for letting me pop on just to chat real quick, Mark. I wanted to point out something very important. I would say this is something that we have been covering constantly on State of the Market. Every Tuesday, you can replay it, and replay it. And it is talking about the one and only Mark's favorite, the Vaz 40 moving average. But I want everyone to really learn from this because it's not easy to just pick up and switch a position and say, hey, I'm going to go short now, because that does lead to a lot of bag holding. You're going to hear a bunch of gurus on, Twitter, like, I told you the market was going to sell off. Oh yeah, bro. Okay. How are your bag holding SQQQ since like January of 2025 last year going, So it's not an easy thing to do, but it's not as easy, but you can track when momentum is squeezing out. Is it the war that caused this? Is it Fed? Is it whatever? News becomes a strong catalyst when the market is fragile. If the market is strong, you better believe that it is not mind being shocked about something. Now that we identify that the market is fragile, and I'm going to show you in this chart one more time how we were tracking this. And yes, hindsight, it would have been amazing to go extremely short right around here when we couldn't attempt all-time highs again. But we saw momentum squeezing out with this broad consolidation. And I'll show you guys what happened last time we had momentum squeeze out of a broad consolidation, basically around the same time. History does repeat itself. And so when you start seeing something like this and the reaction it has had previously on bad news, you're going to start to notice something like this again, magically right around the same time of year. One of the reasons I started to go a little more aggressively short, and again, I have to jump in 2 minutes, but this is why it's important to have your moving averages on your charts, and Mark is going to go further into indicators in just a little bit. Look what happened. Every single time we broke through these moving averages, through this consolidation that was squeezing out momentum, the market still had a little bit of breath to it. It recovered and jumped up every single time, except recently. On my chart, I have the magical 21 moving average, 50-day moving average, and our favorite, the 40-day moving average. And you can use that in your 5-minute chart, but that doesn't matter here. This is the first time that we could not rebound in the fashion that we had before. So while I was seeing, and while we were tracking this live with you guys, hey, momentum is squeezing out. We're not getting a blue sky breakout. The market isn't reacting to any news violently in any direction. What is happening here? This recovery got blocked. Yes, this was a one-off event after the state of the market. We jumped up, but quickly gave those gains back. When you start seeing this, this is when you can start zooming in on your prey and start going in for the kill. Now, my members in game plan and in trade the close, we have been positioning slightly short because, again, you have these insane bear market rallies, which we're not in a bear market, but we have bearish notes. So that is why we slowly went in for the kill, slowly started getting into some positions. Right now, we just closed a short position in game plan for our weekly, over 50%. It took a little time, but I was confident because we could not get over that. And so that is why today I am not surprised we're seeing this. For my gamers, 671.23, we already had a put zone today. 671.23 is the home run target. If we break that, I expect the market to continue to go lower. And I do have to jump off, but I want you guys to watch this because you can use it for the future. Usually when we have an event like this gap down, we need to break this support right around 671.47. Like I said, that home run target as well on our day charts. Breaking this, you're going to start to have capitulation. And to be honest, that is the easiest trade. The next gap down, go short. I got to run. Sorry to keep this short and sweet, literally. Mark, thank you so much for having me on. You can go back to your indicators and memification because, guys, wrap on your seatbelts. This market is going to take us for a ride, and it is unbelievably fun. Just be responsible and be on the right side. Thank you guys so much. I got to jump. Glasses off.
Coffee cup for Boz on my trade to close coffee cup, folks. All right. So as I was stating, oil is being memeified. And what does that mean? It means you get these crazy GameStop from a couple years back to 2021. The way it took off on higher volume, vol going up, absolute craziness. We saw it shoot as high as 120, and then within a few days, it was back to 13. And this is the market. Let me go back down to 6 months now. This is the way the market is behaving of late. They jump into an asset class when it's hot, and as soon as they're in, they're out. And they're trying to find the bag holder. You don't want to be the bag holder. And when I see this type of movement, yes, there is a price shock. There is. Now, regardless, and the Webster's Dictionary added irregardless to the Webster's Dictionary, I will not be using the word irregardless, but regardless of the situation in the equity markets, we're going to talk about them in a second, oil's already overdone. All right, unless this turns into a really wide conflict, oil's already overdone. You know, if I get off, go to crude. Crude futures are now $76. Heading into this, we had $10 of premium. We've added since Friday another $10 of premium into it. So there is some juice in this Brent. Right, cool. I don't want the crush. Here's spot. Brent is up to 83. Brent is more what here in the United States we use a lot of light sweet. Overseas, it's mostly Brent. What they pull out of the Gulf, Brent. It's heavier. And so this is going to react more to what's going on in the Gulf than light sweet should. And that the move that's made 72 to 83. So again, it's up $10. And that is going to put some pressure on Europe. That creates some problems. But where have markets already jumped? And this is big. And Tim and I talked about this yesterday. Where has the market already jumped to? Bonds. And in a day where the S&P is off 2%, 2.2%, the NASDAQ off 2.25%, the Dow off over almost 1,200 points, and the Russell down almost 4%. The long bond is down. The 10-year note is down. The yield on a 10-year note, it got up to 4.1. It is back off to 4.7. And on Friday, remember, it was below 4%. Why in the world, if we have war, markets are selling off, there's lots of uncertainty, we should see three sectors reacting in the green? We should see the VIX up. VIX is 27. We should see the dollar up. Dollar is way up. Now, the dollar has been beaten so bad that you shouldn't be feeling a lot of this. But we are seeing some strength in the dollar after a pretty aggressive decline that started in basically on at the beginning of the new year. Bonds are down. Since the conflict, the 10-year future has gone from 113 spot 27.5 down to about 112 spot 27.5. Full point. And that is equating to TLT, IEF selling off. Bonds should be rallying, but they're not. What's going on here and why? The answer is the Fed. The selling you're seeing has everything to do with oil and nothing to do with war. Now, oil has to do with war. We'd seen the market have a pretty nice run here at the beginning of the year. Now, yes, Mag 7 soft. Software, pun intended, soft. But everything else, strong. XLE, XLI, right? RSP, equal weight S&P, touched a new all-time high on Friday. And darn near closed near the all-time high on Monday. Today it's down 3%. What allowed this rally? The belief that interest rates were going to go down. IWM is your poster child. Since the beginning of the year, since we got the new Fed governor, since inflation seemed tame, had a massive run up. And now, with oil rallying in the last 2 days, up to $76, you have the Russell 2000 taking it on the chin. And it all comes down to interest rates. If they're going to be rate cuts, RSP, Russell 2000, those are your winners. While the AI story kind of figures itself out. Except now, because oil has made this 2-day move, we're now seeing expectations of a rate cut start to come out of the market. And now you see the market sell off and revalue itself. So what do you do as a trader? Knowing that exactly what is happening now. All right, well, when we're traders, we develop kind of 3 scenarios. Your base case. This is what you believe to be the most likely outcome. And our base case here at Option Pit, it continues to be this is going to be a short war. Obviously, worst case is this becomes a protracted war. Iraq 2.0. And the best case is in the next 24 to 48 hours, there is a coup from the Iranian Guard, from some of the lower level leaders that are sick of the repressive, economically damaging, delusional policies of what will soon be the former regime. Those are our 3 cases. The best case seems relatively unlikely to happen in the next few hours. But if that were to happen, and we reach a quick peace, leadership is formed, the speed with which energy and USO, we'll use USO since that's on my chart, the speed with which USO will get to the 21-day moving average will astound you. Remember gold? Off the top, it took 2 days. Silver? Two days. Some of the other sectors that have been memed, When that comes off, you do not have a lot of time to get out. But what you can do is prep. And I believe this is going to be the base case. This is pretty similar to setting up the base case that this is going to last a couple of weeks. You would just have more time. If this conflict resolves itself in short order, bonds might be one of the most interesting investments, because we're getting a new Fed governor, Mr. Warsh. I'm sure he promised that he's going to be aggressive with rates. You're going to have a real opportunity to go into bonds. Next, on the dollar. Anyone planning international travel? If this conflict is going to end soon and you got to go to Canada or Mexico or Great Britain or anywhere, this is not a bad spot to lock in that exchange rate. Adrian says, my parents coming to visit in April from Italy. They should wait, right? They should not be buying dollars now. But if I'm planning international travel, the moment that this conflict starts to resolve, I am going to go buy whatever international currency I need. All right, now that's a little more obscure and doesn't apply to everybody. All right, and oil will mean revert very quickly, right? The memification. And then you will have an opportunity to jump into IWM and RSP quite quickly. I still continue to think 2026, you're going to see value outperform tech by a wide margin. And it's going to have a lot to do with interest rates, energy policy, and the implementation of AI in our everyday lives. They're the actual beneficiaries. This will be your opportunity to jump in with RSP, jump in with IWM. There's going to be a ton of opportunity. Now, one thing, and I'll close with this. And this is the beauty of options. The VIX is 28. To hold this, we'd need to be moving almost 2% a day. We are not going to be moving 2% a day. I believe we're getting an opportunity here. We're seeing some actual panic. And even if there's no conflict resolution here, I'm going to start looking for ways to take the opposite side of the move VIX is making. So I've given you, so today we had Vaz kind of tell you the level she's watching. I gave you an entire game plan for our base case. In tomorrow's show, I'm going to dig in more on our best case and worst case scenarios. So you're going to want to make sure you're there. And I'm going to be talking to you as well about how to approach starting to invest in bonds and how to start looking at taking the other side of a trade like VIX, which has dropped a point since I said it was a short. So make sure to join me tomorrow at 10 a.m. It's the last thing I'm doing before I hop on my flight to Miami. Well, Fort Lauderdale, technically. And so I am going to basically come on here. I'm going to talk to you. And I am going to hop in a taxi cab, and I'm going to be leaving on a jet plane. Yeah, a taxi cab. I'm going to be hopping in a taxi cab and leaving on a jet plane. The good news for Lauren, she does know when I'll be back. All right, folks. And stick around. In approximately 28 minutes, we will be hosting the Jeff and Mark show here. I look forward to seeing you guys back for that, and we can't wait to chat with you. So for Olivia Vaz, your pharaoh of the Fibonacci, I am Mark Sebastian. I am your only option, and I hope you guys have a great rest of your trading days. Have a good one.